This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the datasets, the SPY technical analysis, and the VIX slash volatility slash bear positions for August 20th, 2025. And with that said, let's go ahead and jump straight into the data. And just to preface this really quick, I have not been feeling good the last 2 days. You could probably hear it in my voice a little bit. I apologize if I sound not so great right now. This video is going to be pretty short. I just want to kind of get across the really key information and, we will go from there. With that said, on Tuesday, August 19th, we had the housing starts come in at a very let's see, the housing permits came in at a very low rate. It's actually one of the lowest rates we've seen in probably the last 5 years. Sorry, it's hard to talk right now. Um, we saw rates like this back in 2022, I believe. But besides that, we have not seen the building permits drop this low. Um, take with that what you will. The housing starts looking fine. Don't see any issues there. Now, the actual month-over-month housing starts was down. It doesn't show the consensus here for some reason, but I believe the consensus was about the 5.9%. So it came in at 5.2%. Not a super huge deal. Now, we do have the Atlanta Fed GDP coming in a little bit cooler. So the Atlanta Fed GDP is pretty much like the real GDP in the moment. And they're saying that the GDP is falling, the GDP is coming down, there is weakness. So, that kind of fits all into the narrative we've been discussing, where, very likely the PPI report and everything was just transitory. Uh, Seeing reports like the Atlanta Fed GDP coming in very low, excuse me, is a sign that helps support our thesis. Now, going into tomorrow, August 20th, we have oil data in the morning. We don't really care about that unless there's a really large oil print. Then we care about that because that means that oil prices will fall. We have Fed Waller speaking at 11 a.m. I don't know what Fed Waller is going to say. One way or another, I just know that it's important to listen to the Fed right now because, there is contention within the Fed. There is different opinions going on, and we want to know you know, what the plan is, even though we kind of already know. The 20-year bond is at 1 p.m. Now, for me, this is probably the most important data set of the day, as, excuse me, this is going to really show what the long end of the curve is anticipating. Are they buying into this uh, inflation narrative? And if so, we should see the 20-year yield go up. It should pull, I don't want to say to the 5%, but very likely it would pull very close to that 5%. Um, if the long end of the curve is expecting the inflation. Now, if I'm correct and if we're not expecting the inflation, then we will be seeing that pull downward. It will be heading towards that 4.8%. It may not be a full, percentage point or anything else down, but any, this coming down any is, a major thing for the US economy. So, just keep that in mind that that's going to be very key tomorrow. And I'd be very surprised if the majority of big uh money isn't watching that bond auction very closely. Now we have the FOMC meeting minutes at 2 p.m. And again, kind of just what I've been echoing all week is that We want to know what the Fed is doing. We want to know what Fed members are thinking. And because the last Fed meeting, there was contention, there was a difference in opinions, it's important to read these Fed meeting minutes. Now, generally, I don't really care too much about the meeting minutes, but again, this is actually probably one of the few that I will care about in my trading career. Um, it's I don't really expect to see anything new, but the fact that there is indecision between the Fed members is massive. So the implications from that can be really huge. Um, so yeah, I do want to read this FOMC meeting minutes. It's very important because of that. Now Fed member Bostic speaks at 3 p.m. That's pretty much close to the end of the trading day. So really nothing's going to happen from that. We do have the Jackson Hole Symposium starting Thursday. I don't believe Powell speaks until Friday. Let me just double check. Uh, yeah, I don't believe Powell is speaking until Friday. Yeah, Friday at 10 a.m. So, okay, that looks like the data. Again, nothing too crazy tomorrow, but we do have that 20-year bond that's going to be very, very, very key just because of the implications of what's, occurring with the long end of the curve. And those meeting minutes are going to be interesting, just, more so for the sake of being interesting and probably telling us anything important. If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. All right, and going over tonight's technical analysis, as always, let's open up the daily time frame. Let's turn on our moving averages and our Bollinger Bands, and I will show you all something really nice. If I remember by the time I'm done talking about the moving averages. So, anyway, today the market closed at 639.81, so that means it's below the 5 mile currently, and actually technically below the 10 mile currently. Now, with that said, with the market closing at that 639.81 range, that means that the 5 mile will be pulling downward. Uh, since the 5 mile is currently at 643.28, it's extremely likely we see it pull down very close to the 642. I don't really anticipate it being too much lower than that. I don't anticipate it being too much higher than that. I kind of expect it to really be at that range. If it is not, I would record it because that's going to be key. Uh, with the 5 mile being above us, we let me take a step back. I've spoken about the 5 mile before, and essentially it's like a magnet, and either it's going to pull the market straight towards it and gravitate towards it, or it's going to, flip the polarity and, start pushing the market away. And whether it's above us or below us really will help determine which way the market is going to go. Now, when the 5 mile is above us, we need to make sure that one, if this is if you're bearish, right? If you're bullish, then you can kind of inverse what I'm saying. But if you're bearish, you're wanting to see the 5 mile push us down. You want to see us head to that range and reject, head to that range and reject. Continue rejections of that major support level of the short term. What we're looking for is for the 5 mile to start crossing, excuse me, these very key supports, both the 10 mile and the 20 mile. And from the bearish technical analysis perspective, at least from the way I do my technical analysis, is that the first bearish signal you get is the 5 mile crossing the 10 mile. That's telling you your week's price average, because essentially, the 5 mile is the 1 week, uh, moving average. 10 mile is based on 2 weeks, the 20 mile based on 4 weeks, so on and so forth, right? So if the 1 week moving average is pulling under our 2 week moving average, then that's saying that within the last, you know, past 5 days, we've been trading less than we've been trading within the last past 10 days. So that's showing weakness. That's showing a weakness in buyers. Okay, so that's the first real major signal. Excuse me. Apologize for having to clear my throat on the microphone. I don't have a choice right now. Um, so that's the first step. Okay. And that goes for any chart, anything. First step for the bearish move is the 5 mile crossing below the 10 mile. The next bearish move is the 5 mile crossing below the 20 mile. Once you have the 5 mile crossing below the 20 mile, that's telling you that your week's moving average, or your week's price average or price action, is so weak that it's trading below the 20-day price action and price average. Okay. Um, that's a big deal. That's saying that buying is essentially non-existent anymore, and that now the trend is shifting into a selling stance. And that's how you get these major sells. Um, I was expecting this one to turn into that larger sell down, but that did not happen. But from here, with that said, what should we expect from here? The 5 mile is above us. Um, Very likely it's going to be at that 642 range. That means that the lower bounds of the 5 mile is going to be around that 640 range. So based on where the market is right now with the overnight, it's currently at 637.89. That's actually pulling us very close to this 20 mile range. Okay. Um, that's a good bear sign that we're looking for, but that can also be a very bullish support test. Okay. If you look at some of these charts, you can kind of see how the purple chart, or the purple line in the middle, and I apologize for my colorblind viewers, but it's this very large line in the middle between the two thick white lines. So that's um both the middle Bollinger and the 20 mile. Okay. You can see how the price action either stays above that or below that, and it will continue to test that level until it cracks that level. So this is actually a really good range. Okay, so it's testing the level, breaking through the level, doing another test, showing that it still needs a little bit more juice, testing the level again, and finally breaking through, coming up, testing against the level on the downside, rejecting, downward, retesting the level again, rejecting downward, finally having enough juice to retest the level, break out, come back, retest the level. So you can see what I'm talking about. They either generally trade the price above the metal Bollinger slash 20 mo, or they keep it below it. So what's going on here? Are we going to see continuation of, hopefully my drawings aren't everywhere. Um, don't pay attention to all that too much, just pay attention to this line. Are we going to see a continuation of, basically hitting the 20 mile and bouncing upward? Excuse me. Or are we going to see the breakdown, where kind of like that other trend where we saw the break through the line, it still wasn't enough, and then maybe this time they finally create enough of that liquidity to create the move to push downward further. Okay, so that's kind of what we're what we're looking for right now. Um, with that said, Excuse me. If you're a bull or a bear, it doesn't matter. When we get to this 20-mile range, you still my daughter says hi. We get to the 20-mile range, you need to take contracts kinda on both sides or positions on both sides. Uh, Generally, this is the range where I will take, uh, for example, let's just use SPY. I'll take a SPY straddle where I target both the upper Bollinger and the lower Bollinger. I go out for a month, 2 months, and I let the market decide whether we're going to bounce upward and continue trading in that upside, or if we're going to break down and start trading in that downside. Okay. Um, it's a very, very, very good range to set up contracts. It's a very good range to kind of reset positions. So if you're not enjoying the bear position anymore, use that range to reset. Okay. Not everyone has to take the bearish stance that I'm taking right now, where I'm continuing to hold these shorts through immense pain. Um, just the bear's life. But besides that, either we're going to continue trading above that line or we're going to break through. Okay. That's kind of just simple reality of what we're looking at right now. Now, from the moving average perspective, we should expect the 20 mile to be taken at this point. What that means is that we should expect the upper bounds of the 20 mile all the way to the lower bounds. So that's the 638 all the way to the 634 to really build support and test the range. Okay. So again, if you're bullish or not, it doesn't really matter. Use that level to set up positions, exit positions, do whatever you want to do. But that's kind of your reset range. Now, with that said, the 5 mile will very quickly be pulling to this 20-mile range. So if we trade within this range for a few sessions, probably within another 2 sessions, the 5 mile will not only pull through the 10 mile, but it will also pull through the 20 mile. And it's essentially collapsing the moving averages on top of each other. This happened right before the major sell-off, where we had, and I'm going to, yeah, this is fine right here. We kind of had the same type of movement where we went under the level, pulled up, we're testing above. We didn't get the downside moves yet at all. Um, we've barely just had those support tests, but you know, retested liquidity back up on the top, and this is the part that looks a lot like where we're at right now. Okay, because we've had, a couple of those uh little Bollinger tests and 20 mod tests, but we haven't had anything really conclusive below to test like the lower Bollinger. And then from this range we saw weakness, kind of where we're at now. We were starting to see weakness. We were seeing the market pulling into the 20 mod range. Potentially we get that extra move up, like I just discussed. They can bounce it off the 20 mile, continue to pull up, but it is showing that weakness is building. And again, this was before the major correction. Okay. Now, I'm not saying we're getting some crazy major correction, don't go that far, but what I'm saying is that look for what the market's trying to do here. Either we're going to bounce and continue heading up, and this is going to be the liquidity to push the market into that 650 range, or we're going to start breaking down. And, we've been talking about this breakdown for quite a while now, just from a structural point of view. It would be bullish for the market to break down here too. That would be a ton of liquidity for the dealers to grab. Um, they have their yeah, they have a whole, um, 80 points below us that they can pretty easily grab. Um, so if they really want to keep this major bull market going, then again, we're looking for something like this. We're looking for the pull down. We have our larger cup. We have the top of the cup potentially, right? Form the handle down, and from that handle, build bull structure in there. And from that bull structure, we can now climb back to the top of the channel. Okay. That's the bullish thesis. And this is why I've been saying that even the bulls, you guys need a chance to reload positions. When you're just chopping in a very heavily consolidated range like this, it makes it nearly impossible for you guys to position very well. Now, before I exit out the daily chart, I do want to highlight a really key range here is that I discussed this in Sunday's video. I didn't get to post a video last night because I wasn't feeling good. But I discussed this major consolidation channel and I said either we're going to build support on top of the channel and bounce off this channel and hit the top of that upper buying channel, or we're going to start breaking back into this channel. And what happens if we break back into this channel? We will very likely head all the way down. Okay, because that's how these consolidation channels work. Generally, you trade all the way from the bottom to the top, to the bottom, to the top. So, that's what I'm expecting here. I am expecting that move downward. Now, going over the 4-hour time frame, and this is going to look ugly for a moment, hopefully only for a moment. We did have our minor head and shoulders play out here, so I'm going to actually delete this now, and we can finally say that yes, this was the head on this head and shoulders. What we're looking for now is completion in some of these inverse cups. So our first inverse cup here, excuse me, should come down all the way to the 635 range. Well, what's at that 635 range? That is the 20 ma, right? That's the lower bounds of the 20 ma. That's basically right where the 20 ma is at. So we can expect the bottom of the cup to be in that range, but we also have what we should expect is a descending right shoulder starting to build. And why I'm saying descending is that this should turn into a very large inverse cup in the grand scheme of things. Okay, it shouldn't look like some Frankenstein head and shoulders. So we are looking for more downside. We're looking for a downward consolidation. Whether you wanna call it a descending wedge or whatever, I don't care. Um, you're looking for that downward consolidation. You're looking for the market to continue rejection of the 5 mile. You're looking for the market to start testing that 20 mile range and to start really, pushing on that 20 mile range to the point where the daily time frame has our 5-day moving average pushing below it. Okay, that's what we're really looking for a major bearish move. We're not going to get that until we start seeing that, but this is how you get it. Um, this is how you get your moving averages to kind of collapse and fall down and fall in that, you know, inverse direction that we're kind of looking for from the bearish side. Now, from the bullish side, let's just kind of go over the moving averages. Again, we've already tested the 5 mile. So far, we've rejected it. So technically, if you're bullish right now, either one, you should be waiting for the 20 ma to load calls back up for the upper Bollinger, or two, you're going to see this range bought up prior to that, and that's going to be your call entry or all the way pretty much to the upper Bollinger. Because that's how you continue this move. Okay, as you can see, pull down towards that 20 ma range, test it, boom, tons of liquidity. Pull down below the 20 mile range, boom, tons of liquidity. So if there's going to be an area to load up for the bulls, it's either going to be right in the center right there or at the lower Bollinger. So that's what you're looking for. With that said, um, let's just very quickly go over the volatility. Now, we did have the VIX volatility pull up today, and we do have this, this cup and handle that's been building for quite a while now. We've been discussing that, and so far it's looking really good. We do need to see a lot closer to that 113 range, which, that could be one or two sessions depending on how bearish things actually get. But we do know that people are starting to press the sell button. Uh, the VIX volatility being above the 98 range is showing that people are actively taking VIX contracts, that the insurance price is actively moving upward. Okay, so same with our like UVIXY, and I'll change this to an hourly time frame to actually show that yes, it is moving up. This is moving with the volatility. I've discussed this in Weeble chat a few times, but UVIXY and UVIX do not follow the VIX. They follow the volatility index, and the volatility index is how you ensure your equity position on your futures. Um, if the vol is sitting, say, at a 9800 range, then that means that the insurance rate on your equity positions is essentially 9.8%. Okay, so when the vol is low, it's very cheap to hedge the upside. Okay, now that vol is starting to pick up in price, and we know that because UVIX and UVIXY are moving. Um, Again, you can have the VIX move because the VIX moves based on S&P contracts. It's based off of puts or calls being written on the S&P on the SPACs. It is not tracking the the volatility insurance instrument. Okay, so it's two different things, but they're trying to still track somewhat of the same thing, just in a very different way. So we can get major moves in the VIX while we don't see any moves in UVIX or UVIXY at all. Um, that explains why that happens. Now, with that said, we are starting to see some major weight being pushed into UVIX and UVIXY. Um, that's a really good sign for the bears. Now, another really good sign for the bears is that the credit spreads, uh, hold on, high yield credit spreads are at an all-time low level, which actually hasn't happened since the 1990s. It's literally at a decades low level. So what that is generally saying is that one, either the market's going to absolutely blast off because there's just zero downside risk right now, or two is that um, people are absolutely loading up on the upside yield because they know that the top is in. Now, I'm in the second camp. I do believe more so that the top is in, and we're seeing that through, the HIG. We're having massive selling. The 1 hour candle is kind of telling a lie because we have like a single share purchase right now pushing the overnight price in HIG up to the 63 cents, but it was down quite a bit. Um, and it was trending down during the day too. It doesn't look like it, but it was pulling down quite a bit. We saw we're seeing the DXY, which is, the dollar index. This has been gaining weight for the majority of the day. As you can see, major weight gain throughout the day. Um, Usually the dollar gaining weight isn't a good thing because that's not good for the economy, but it does help the bearish position. So, um, this is the team we're rooting for right now. uh, higher dollar yield or a higher dollar. That's something, that helps us confirm that we are seeing bearishness stepping in. We are seeing the treasuries um moving upward. We're seeing a lot of weight being pushed back into TLT. And that's, a really good thing. We've been talking about TLT, how it's been working on that liquidity to break out, and very likely that's going to happen any day now. Um, the 10-year yield has to this. Yeah, it has been on a downward trajectory so far since the weekend. So yeah, that's good. Very likely we see this pull below the 4.3% range. Probably tomorrow when we have that 20-year bond auction. Um, okay. That's my spiel. Um, I'm super tired. I don't feel well. Watch Bitcoin. It's going to tell you kind of a ton of, what the market's anticipating doing. I've been mentioning this for a long time now, but Bitcoin is institutionally owned, and because of that, uh, the market's generally going to follow it. Now, we have this pretty gnarly double top up here on the daily time frame. We do have a little more downside to the 12 or the 112,000 mark. Very likely that's going to be hit. Very likely that's going to be pulled all the way through, and we can start looking to that 107K mark. Um, Kind of the same thing with the dollar. I don't like seeing Bitcoin fall, but it does support the bearish equity positions. So it's kind of just a necessary evil right now. But very likely we will see that pulling downward. If not, then this is going to turn into a very large cup, and we're going to see it pull all the way back up to the 124,000 range again. Um, okay, yeah, that's my spiel. I hope everyone has a good night, good day. Um, Trade safe. I know that the big data doesn't really come out until Thursday, and then Powell speaks on Friday. So just, trade lightly, be prepared for that. And let's have a great trading day tomorrow. Take care, everybody.